The most major international event in 2022 would be Russia's full-scale invasion of Ukraine and Ukrainian resistance to that attack. Aside from the military ramifications, the invasion has resulted in millions of Ukrainian refugees, the migration of many men of military age from Russia, disruptions in food and energy supplies, and changes in the Russian economy. Before getting into the video, please press the subscribe button at the right bottom and click the bell icon in order to get updated. And make sure to follow us on our Instagram. Russia's horrific conflict in Ukraine has already lasted almost 9 months. The EU, the US, and a number of other nations have put severe economic sanctions on Russia in order to limit its financial and technological capacities for conflict. The Russian economy has already suffered as a result of the conflict and sanctions. Russia has been mainly isolated from the global economy and has only recently established new commercial partners. The war and sanctions will have a long-term impact on Russia's economy. Russia's financial flows are drying up. War and sanctions have wreaked havoc on Russia's financial sector. A significant portion of the country's currency reserves have been frozen, access to international financing is restricted, and international payment transactions are difficult. In the early days of the invasion, the Central Bank of Russia was forced to impose severe capital flow restrictions in order to support the ruble's exchange rate and avoid a financial catastrophe. For the first time in decades, Russia's government defaulted on foreign debt in June of 2022, as sanctions hindered payment to international creditors. Foreign finance for Russia has always come mostly from nations that are currently punishing it. According to available statistics, Russia has been unable to find major new sources of foreign financing. Indeed, following the invasion of Ukraine, Russia's net foreign direct investment inflows fell into historically low territory. Hundreds of international firms have opted to leave Russia, despite Russian officials making the process extremely difficult. Foreign direct investment loss has been cited as one of the most damaging repercussions of sanctions for the Russian economy. Import losses have harmed Russia's technological industry. The various export restrictions imposed on Russia target high-technology commodities, with the goal of weakening Russia's defense industry's manufacturing capabilities. Russia has discontinued publishing foreign trade figures, although Russian imports are expected to have decreased significantly as a result of the conflict and sanctions. Imports of numerous technological items have dropped very drastically. An additional measure based on mirror statistics, export data from important trading partners, indicates that Russian goods imports were down 28% from pre-invasion levels in September. This alternative indicator has previously tracked the evolution of Russian imports pretty closely, with a correlation of 0.97. Despite years of attempting to replace imported items with indigenous manufacture, Russia remained heavily reliant on important high-technology goods and inputs prior to the conflict. Mining and low-tech resource-intensive sectors continue to dominate Russia's industrial structure, as they have for decades. With sanctions limiting the availability of technology and money, Russia's options for technical import substitution have grown even more constrained. So far, it appears that non-sanctioning nations have not offered Russia with sufficient replacements for most technological commodities. Indeed, Russia's imports from numerous sanctioned nations have decreased. While Russian imports from China and Turkey have recently surpassed pre-war levels, the percentage of technological items has remained steady. Technology imports from neighboring nations such as Kazakhstan have increased significantly, although the absolute volume is still fairly small. Sanctions are already affecting several of Russia's export-oriented industries. Sanctioned nations have also put limits and levies on Russian imports. Many of these import restrictions have been accompanied by transition periods or other changes, allowing sanctioned nations and global markets time to react and mitigate the consequences, like price ceiling on Russian oil shipments instead of a total ban on related services. While this method reduces expenses for other nations, it also dilutes the benefits of such actions on the Russian economy. Some of the import restrictions implemented earlier are already having a visible impact on Russian industry. For example, Russian wood and steel producers have been unable to find alternative export markets that offer profitable price levels. In these industries, output has declined sharply and companies have suffered heavy losses. Russia's oil industry has fared far better. According to Rosstat, Russia's statistics agency, oil and gas GDP remained steady in the second quarter of 2022, despite non-oil GDP contracting by more than 5% year-on-year, or slightly more than in the second quarter of 2020, during the first wave of the COVID-19 epidemic. The EU, Russia's top consumer of oil, has just proposed import limits that will go into effect in December of 2022. Furthermore, a rise in world oil prices, even if Russia oil has been sold at a discount, has aided Russia's oil sector, as has a reorientation of Russian oil to new export markets, most notably India and China. The EU import restrictions on Russian oil are projected to reduce Russian export income and output when they go into effect. According to simulation studies, the cost of sanctions for Russia might skyrocket as additional nations join in. Russia's long-term economic potential is eroding in coming years. Even if Russia's GDP predictions for this year improved from last spring, the forecast for 2023 decreased. Instead of a sharp drop, Russia is facing a lengthy and severe recession. Recent predictions predict a 7 to 8% loss in Russian GDP in 2022 to 2023, a drop comparable to Russia's severe economic crisis in 1998 and 2008. The difference is that the Russian economy recovered quickly following previous crises, but Russia's current prognosis is bleak for the foreseeable future. Before the conflict, Russia's potential growth appeared to be quite muted, with most predictions hovering around 1.5% each year. Long-term growth in Russia is hampered by unfavorable demographic trends, poor investment rates, and low productivity levels. War-related losses, permanent damage, mobilization, and immigration have further distorted the population structure. High uncertainty and highly restricted access to international finance stymie investment. Increased governmental participation, a focus on defense sectors, and a lack of access to Western technology all contribute to lower productivity. The IMF World Economic Outlook's 5-year predictions give a general picture of Russia's dwindling economic potential. Assuming that the 5th projection year represents near potential growth, the IMF predictions demonstrate the extent of Russia's military aggression and sanctions on its long-term development, following its unlawful invasion of the Crimean Peninsula in 2014. Russia's potential growth rate was projected at 3.5% per year in the October 2013 World Economic Outlook. By October 2022, it would have dropped to 0.7% per year. When the 2019 and 2021 estimates are compared, the COVID-19 pandemic accounts for just around 0.25 percentage points of the anticipated reduction. There's ample evidence that the Russian economy has suffered as a result of conflict and sanctions. The most severe consequences are still mostly restricted to certain industries targeted by sanctions. Transition periods and other measures reduce the negative effects of sanctions on punishing nations and global markets while also dampening their impact on the Russian economy. Sanctions have little direct impact on the Russian people because its primary goal is to weaken Russia's military capabilities. Nonetheless, all Russians will suffer for many years from a declining level of life as a result of Russia's misguided conflict. According to the research, a larger coalition of sanctioning nations might significantly increase the cost of sanctions for Russia. The sanctions' impact is projected to grow gradually over time, clouding Russia's economic picture for years to come. However, while sanctions are a crucial instrument for limiting Russia's ability to wage the conflict, additional measures are also required. That's all for now. Let us know what you think of the video in the comment section below. Please subscribe to our channel and click the bell icon to receive new updates, and we hope to see you in a next video.